Hi, welcome to the Market Alert for Tuesday, the 2nd of December 2015. And starting off in the 5-minute chart in the basic version for yesterday, you can see that we had sufficient volatility to move the market. In the pre-market, it was fairly quiet, but then the market moved nicely in the afternoon session. You can see there the market driving higher and then also coming back in the same direction as well after the economic news items had been released, which is fine. You don't want to be in when they are going to be released, but it's fine to take a signal thereafter. So we've got the first one there. You see the market moving higher. It then drives through the scalp level there and to the psychological level of 17,850. When the market drives through the scalp target, this is the clue and your cue to actually consider trailing the stop. So the market drives through, goes to the scalp level there. It's not the scalp level, sorry, the psychological level. And if you want to take profits at this point, if you believe the market's not going to move any higher, then you can do. You can also move the stop to break even at this point as well and remove the risk there, the initial risk, and the scalp can also stay in place as well. You may want to keep this in just in case the market reverses and comes back towards it. But on this occasion the market then drove through once more and then continued higher with another bar, and then we have another rising low. So you can see there the market's putting in each low, each successive low is actually higher than the previous one, and that's what we want to see when we're actually a buyer of the market. So as the market goes higher, you want to use these higher lows to actually tuck underneath, and you can do that by using the extend right tool. And on this one we can choose either a 50 or 100%. It just depends on how much room you want to give the market to breathe. So in this case, if you'd have gone 50, the market's gone through the scalp and continuing higher there. If you put 50% here, you can see it brings you back just above the scalp, and there under the next bar takes you above the psychological level, and then there you can see the market reverses and takes it out, and that's using 50%. You can do the same with 100. The choice is up to yourself. So there you can see we're just below the scalp, which you don't really want to do, because if the market comes back down to the scalp, you want to take the profit. And then in this one you can see we're back to the psychological line, and then finally we're back below the 50% one there. So the choice is up to each individual trader depending on how much volatility we've got in the market. And we haven't had much recently, so you may want to keep the stop a little bit tighter and take more off the table there. We then had the market reverse and move lower. Just go back to the trade markup there after the news. I see the market moving down again, driving through the scalp and the psychological level, and once again using the, this time we've got the opposite of what we had before. We've got lower highs, so you can see this high is lower than the previous high. This high is lower than the previous bar's high as well. And again with 50% and with 100% should take us back to the psychological line just below it there at 17,797. So either way the market would have taken this out as well. You have got support to the left there as well on this trade, so another profitable trade there. And then finally a third one before we go into the quiet session. Now on this one you can see the market drove through the scalp. You could start actually trailing the stop, but we're going into the quiet session. We haven't hit the psychological level and the market's put in a reversal there. The high of this bar is lower than the high of this one, but you can see the market coming back. So if it comes back to the 20-point scalp, then as we're going into the quiet part of the session you may want to take it. If not, you can always leave the stop in place if you want to let it breathe, because you've got this psychological level there. But at the end of the day you're still making the same. We've had a lot of volatility in the first two trades, and as I've said over the many weeks, because of this interest rate increase that's looming, that if you get profits in the first hour, you may even want to leave the second hour alone as well, which is why I sent out the email late yesterday afternoon. And in fact, that trade only produced the 20-point profit, and it took until 8:30 before the market actually hit and then drove through the scalp. It did go on to make a few more points, and this here is the 9 p.m. bar. So again, you can see why it stopped, because it's the same price level as the 5 to 3 before the economic news came out yesterday. So yesterday, a very good day, given that the market's waiting for the Federal Reserve. And the daily chart, you'll see we've got a straight reversal in there, going back to this high. Don't be surprised if this is taken out today, probably taken out in the pre-market session as well, and then head towards that 17,978. And the reason I say this is because there is a huge amount of Federal Reserve news today. If we just move through here, we've got Lockhart speaking at 10 minutes past 1. We've got the ADP non-farm employment change. This is out. We've also got 1:15. We've got I think this is the revised figure. But the big one is Friday for the non-farm payroll figures, which will be a deciding factor for whether they're going to increase interest rates or not. It came out far better than forecast last month, which is why the speculation has been, and the consensus, that Yellen is going to increase interest rates. I don't think she's going to. I hope she does. It'll be great because she'll create a global financial carnage if she does, and that's good for traders. If she doesn't, well, there's a credibility issue at stake as well, so we should get a lot of volatility as well. We've got Yellen speaking at 1:30, so she'll be out of the way by the time the market opens at 2:30, but then they're bringing her back at 5:25 as well. So again, during the quiet part of the session. And at 20 minutes to 9, we've got William speaking as well. So they're really wheeling them out this week. And as we head towards that 16th of December, when we'll see whether the Fed are going to raise rates or not, you're going to see a lot more of this as we go towards it. Nobody knows what they're going to do. Like I say, I suspect that they won't be able to raise rates. It will be financial suicide, but who knows? There have been many mad people in the world before Mrs. Yellen and the Fed, but we'll wait and see if they do. And like I say, I hope they do, because that will be great for volatility after, because there's no way the market will be able to hold with a rate increase. It will for a while, but as we go into the new year, then we'll start to see all of this Ponzi scheme that we've had for the last 8 years unravel. It's money that's just been pumped into the market. It's cheap money that the bankers have had, put it into the market. It's not gone into the economy. There's not been a recovery. You only have to look at the economic data coming out. It's bad all the way through, and yet the stock market's still going up. So exciting times ahead as we head towards that 16th. Could be frustrating as well, as I mentioned yesterday, but in the alert with regards to some days may be fairly quiet as we wait for that day of reckoning, as it's is likely to be one way or the other, because if the Fed don't raise rates, they lose credibility as well. So it's a win-win for us. And then in the advanced, for those that use the advanced, we've got the same signals there, just different symbols, and also the professional bars on there, the test bars, so you can see what the market did thereafter. But a very similar picture. And again, you can see after the first hour there how quiet the market became. It was in a 50-point range, but then managed to move its way back. So fairly quiet for the remainder of the session after that initial burst, which is why it's important, if you make profits in the first part of the session, to just ignore and let it go in the second part. You don't want to be sitting there watching this type of very quiet and boring price action there. And finally, in the implied volatility, dropping down from yesterday's 13 point whatever it was, I can't remember, I think it was 7.4, but we're back below 13, which is what you'll see as the market moves higher in the underlying market there. So down to 12.94, lines more or less converging in the chart there. Right, that's it for today. So a lot of news today, should be sufficient volatility, fingers crossed, and let's wait and see. Right, that's it. I will see you in tomorrow's edition. As ever, thanks for your support, also for watching. And here's to another good day in the market. Thanks for watching. See you in the next one.